I wanted to kind of start us off on actually doing those things, right? Using technical excellence to deliver great client service and to enhance our own careers. Let's talk about a few specific situations that come up and I tried to pick situations, you guys, where it really makes a difference in those areas, right? It really increases the client service excellence and also increases our own earnings and our own career potential. So all the examples that we're going to work through, and we don't worry, we don't have an unlimited amount. I realize this is day 3. All right. So, but every example, let's look at it in that way, right? Like, how does this increase client service excellence, and how does this enhance my career and help me keep moving forward with my earnings and, with my opportunity? Maybe certain client groups, hey, this is a niche that I really want to start working more in, right? So just running all the technical excellence stuff through that lens, I think, is really, really important to get the most out of this. So who has self-employed clients that bring up concerns about buying a home and getting a mortgage? Is that something that comes up? Okay. All right, so now we're live on the iPad and we're going to look at a Schedule C and let's imagine that the client is concerned about getting a mortgage. And so on your guys' example here, that's going to be this one here. So if you want to kind of reference the Schedule C as we work through it on your side, and then I'll have it here on the iPad with my little pencil here. So this is an example of a daycare Schedule C. And when you go to get a mortgage as a self-employed person, and let me know if you've done it yourself so you can relate to this, it's a totally different process and level of, not to say annoyance, but difficulty than having a W-2. So it's just a totally different thing in terms of it's kind of like doing your taxes as a self-employed person versus as a W-2 earner. You have all these other things you need to think about to qualify, whereas a W-2 employee, they're going to give over their W-2s to the loan officer. They're basically going to know whether they're going to qualify and how much they're going to qualify for pretty quickly, pretty easily, right? Schedule C, or self-employed in general, you have to actually think about it. You have to think about how your taxes relate to whether you're going to qualify, okay? So what is the main goal of most Schedule C clients is to reduce taxes as much as possible without getting audited, without doing something wrong. That's basically the mind frame, right?
Yeah.
And so we kind of get on that same mind frame with the client. So you're trying to find extra deductions. You're trying to see for some expenses might be partly personal, partly business, take a percentage of that, right? That's the whole art of doing a good Schedule C return, right?
Yes.
But when it comes to a mortgage, it's like, it's kind of like the Bizarro World thing in Superman, where it's like, you want to look bad to the IRS, like, it's a tough year. You want to look good to your banker.
Yeah.
So you have a different motivation when your main priority becomes to be able to buy a home, which for some people, that's a huge part of a lot of our financial lives, right? And that goal. And what happens with self-employed is you think, my taxes are preventing me from being able to buy a home. So that's what they normally will go and learn from a loan officer. So they're like, I'm happy I'm getting all my write-offs on my taxes, but now I'm actually really having trouble qualifying for a mortgage. So is this a situation that resonates with you guys? And
yeah, that also, yes. and earned income credit too. Like you have a single mom or dad, has a couple kids, and they're looking for the ideal earned income credit, and so that they manipulate the Schedule C. So I've seen that a lot.
Yeah, and you could see how it's different motivations and different goals, right? Like, so when they come into the tax office, their goal for that year may be to do my taxes in a way that's going to give me the best chance to qualify for a mortgage, right? So is this situation kind of sounding familiar? Like, it does come up? Okay. Now, on a level of 1 to 10, when a client tells you that, how confident are you as of now that you feel like you kind of know how that's going to work and how to really because they're expressing to you their goal, and it's a very deep-seated goal a lot of times to buy a home. So how confident are we now of like making sure we help the client really meet that goal?
I feel confident because I've learned more about different lenders.
Okay.
So every lender lends out depending on the situation. So some will look at the current year and the year they're buying their home, and the previous year. They only look at 2 years, and then there are other lenders that do 3 years back. So it's just that what I tell the person is go find out from your lender who you're going to use first, and what is it that they want, the 3 years previous years, current year, or the year that is coming up. Because sometimes I was talking to one of the loan officers, and she was telling me that they'll look at the last 10 months or 12 months or something like that. They'll do like a whole calculation, because their approach is like, what are they receiving currently?
Yep.
And because even if their income increases, because some people will make like $6,000 one year, and then the next year they'll make like 100 or 200, whatever it is that they're doing for their business. But
Right, because their business could have grown or it could have even declined.
Yes.
Right? So that's actually point number one, is to understand how lenders view the time frame, right, of how they're, and so the default time frame is 2 years. So normally they'll go off a 2-year average. However, there's like kind of alternative qualifications, right? That a lot depends on whether their business is growing. So if your business is declining, your gross revenue and or your net revenue, then they're going to want a longer time frame,
Yes.
right, to establish that, hey, you can pay this loan, right? So that's a really, really great point. And you've heard of things called like bank statement loans.
Yes.
For self-employed. So what is that doing? What is a bank's quote unquote bank statement loan doing for a Schedule C borrower? What does that do for them when they are working with the bank?
They're just verifying that the income that's being reported on the Schedule C is actually coming in.
Okay.
I know I have clients that instead of working off tax returns, they're working off bank statements, because sometimes not necessarily what's being reported on the Schedule C is matching bank statements, but I do know that type of loan has a higher interest rate, so it's not favorable.
Right. And so the bank statement loan, quote unquote bank statement, is using the bank statements to increase the income generally, right? As opposed to the tax return. Okay. So the second main concept that I wanted to talk about is debt to income ratio. So when you look at the net of a Schedule C, so let's say this Schedule C here is a pretty decent like gross income, right? 15,000 a month, that type of thing. So a real business going on, right? And probably in general a pretty solid business, like daycare, it's probably something that's going to continue. It's not, it's just something that's needed, right? So you kind of know when you're working with this kind of client, you've got a pretty solid like business. You've got income coming in, right? There's a lot of write-offs going on, including, you can see line 30, there's like 24,000 of home office expense, which is again pretty common with a daycare, right? Because they're using their home.
Right.
So they're getting a lot of write-off there. Significant amount of contract labor. Okay, and so just looking specifically for the loan qualifying part of it, because you're kind of you're separating as a tax preparer, like, okay, I want to minimize the tax, but not do anything unethical or illegal. So that's like your tax mode, right? But then you're like, okay, this client has brought in a totally, a different goal of being able to qualify for a mortgage. So I've got to also think in that way. So when you look at this net income right here, the net profit, when you divide this by 12, right, you're going to get the average,
$3,000.
right? You're going to get around $3,000 of income, right? So when you go to qualify for a mortgage, they're and different lenders, like you mentioned, Imelda, they'll have different debt to income ratio maximums, but it's generally like 43%, 44% of your net income can go to your debt service, including your new mortgage. So if you are making $3,000, right, per month net, and you can have, let's say, 40% of that go towards your mortgage, then you can qualify for $1,200 a month of a mortgage payment if you don't have significant other debt like credit card debt and all that, right? So you can see that's going to be, I mean, in California, right, $1,200 mortgage payment's going to be very rare, right?
Yeah.
Bathroom.
And then
Well, what about the tiny house?
Yeah, the tiny house. Yeah,
you
Okay.
yeah, tiny
House
house
is
is like $800 a month,
Yeah.
so you'll afford.
yeah,
a
but it's
tiny
up in the
house.
mountains somewhere
Yeah,
by
somewhere.
yourself.
You
middle
got
of
plenty
a
of alone
desert.
time.
Yeah.
Okay. So in other words, you can kind of tell that you're way out of the zone of qualifying for like $1 million mortgage, let's
Right.
say, right? So in understanding debt to income ratio, if you are on self-employment income and 40% would be like very conservative. So it's like you can multiply the net income on a monthly basis, right? By 40%. And if the person doesn't have significant other debt because they put other debt into that, it's like, okay, you're in the neighborhood of qualifying for this much, right? So once we get into that conversation, we want to be careful of, we're not loan officers. So this isn't actually what we do. So our role is not to like,
Qualify you.
yeah, to qualify you, right? So we need to know, like Imelda said, that there is a loan officer involved that is experienced in self-employed people. Like sometimes you'll get clients where the loan officer is, they're used to dealing with W-2 people. So just like a tax pro that's used to dealing with W-2 clients, they're not a good fit to work with a Schedule C borrower. So that may be something where our contacts, like each tax pro should have a loan officer or 2 or 3 that's very skilled in self-employed work. Okay, so that would be the point of contact for this, and we're more like, okay, let's generally understand what's going on, right? But they are the contact person for it. Does that make sense?
Yeah, so I know that there are add backs though, right?
Right. And that was going to be the next point, is they have add backs or excludable items where, and the most common of those would be vehicle expense. So you can see here on this $9,600 on line 9 of the Schedule C. And then, so expenses that you would have regardless of if you had this business or not,
Correct.
right? You would have a car expense, right? And what else would you have? You would have a home expense.
Yeah.
Right? So those really are not like added expenses in the same way as your contract labor is, that they're actually like doing work and, it'll move up and down as your number of people, right? So a good loan officer, they have like spreadsheets, and they have their own spreadsheets, right? Where they can add back those expenses onto the net profit to increase the net profit without what? Raising the person's taxes. Because let's say you go here and the loan officer had said, I need to have this much net income. What's going to happen, right? The taxes are going to go way up, right?
That's true.
So now you're in a communication situation with the client where it's like, they're not used to paying that much taxes, right? Now they're going to have debt, right? So understanding that there's add backs and being able to read a Schedule C of, not to authoritatively comment on it, like they're going to be able to do this, but has the loan officer looked at this? Because these could potentially be add backs, and in this case, right, it's pretty significant amount. Like it's, about $34,000,
Yeah, it is.
right? So it's essentially doubling, and now you're at a $2,400 mortgage payment potentially, right? So I think just in being able to engage in that discussion is something that, remember, with service, we're trying to pull ourselves out of being compared to other options that are do it yourself or like not that good. So when you're getting on this level with somebody, you're actually understanding, like, you want to buy a home, like, why is that important to you, right? What area are you looking at, right? What kind of, and starting to engage in this. We're not trying to comment and be the authority on every single aspect of it, but just being able to navigate this discussion raises your value tremendously.
Something that we do in the office too is if someone's already kind of working with a lender, is we'll work on the return and not finalize it until the lender has also seen Because once you've filed it, it's like, amending a return is not that I won't do the work, but I don't like to do amendments.
Do you have any clients that like amend their return before they buy a house? Like amend their last 2 or 3 returns?
No,
No?
I have
Seen
clients
that.
who will come in and will just report more income and not as much expenses,
Mm-hmm.
and then we'll come back to amend the return. But if I'm doing any kind of amendment.
Meaning
like
to
with-
increase the expenses.
To increase the
Right.
expenses, but if we're doing any kind of return like that, like I want to see the expenses,
Mm-hmm.
right? To verify
Yeah.
that they actually had them, I'm not just going to.
And it gets into with those where it's kind of like they say where it's not a good look. Like, let's say that you're the underwriter at the bank, right? And even for us, like there is a kind of that ethical part of it, right? So it's a little bit of it's a more advanced type of conversation, right? And it's a really big deal for being able to be a top level tax pro. This is something that we need to understand for self-employed people. I mean, a lot of the opportunity in our industry right now is helping self-employed people. And sometimes when you're self-employed, you essentially feel like, well, being self-employed means that I'm either going to have a horrible time trying to buy a house or not be able to. So my tax pro can kind of help me figure that out and work with me. Maybe it might take 2-3 years. Have you guys seen any clients though that we've kind of helped them to be able to become a homeowner? And how does that feel?
Great.
Yeah.
Yeah, especially given the price appreciation over the past, we've been in West LA like around 10 years, right? So if they were able to make that happen, that's been a huge part of their financial picture, right?
A lot of it is outside of LA, just because it's not affordable in LA.
Right.
But yes, it is definitely a good feeling when you have first-time home buyers, especially.
Right, because that was helping them get into their first house.
Right.
Yeah, awesome.
What I do with people that are not considering to purchase a house yet, I let them know, if you decide to, consider the whole income situation and make sure you get well informed.
Right.
So I let them know ahead of time, because there's people who's like, how much money can you save me? They're all interested in this, and the
So even if they don't mention it, you might mention it.
I bring it
Okay.
up. I bring it up to more younger that is still not established,
Okay,
because that they don't have a home and they're not married or whatever. So I bring it up because you can tell that they're going to be in that business for years.
okay, interesting, right. So mention it ahead of time as something to think about, right?
Yeah.
If you just finished watching one of our mentor videos and are interested in joining the Dream Team, but would like to know what comes with the membership, I'm going to take a quick minute to review some of the courses that come with the membership. First off, this membership is for those that would like to advance as a tax professional, or for those that are working independently and would like to have some community support so that you don't feel like you're doing the business alone. We're going to start off here at the dashboard, inside the dashboard, and the system shows you 6 courses at a time, as you can see here. And if you scroll right down here at the bottom, you can click through the pages and it will show you the courses. If you're looking for a specific course, you can also type it up here in the search box. So let's type in ethics. You don't have to type in the whole name. And it'll give you courses that have ethics in it. But if you're looking for ethics for the 2 hours, it would be this one.